Good morning, everyone watching live here on BAM YouTube. Let me know in the comments which market you are tuning in live from. I am Byron Lazine. This is the Hot Sheet. I am in Connecticut, and today is Tuesday, February 28th, the last day of the month. We've got an S&P Case-Shiller index report coming out. We've got an inventory update and more. You are tuned into the Hot Sheet, and it starts now. All right, just this morning, we had a S&P Case-Shiller index for the year closing out. Just happened here at 9 a.m. So we're going to review that. Hit the thumbs up if you would like to support this show. It's the best way to support it. And please consider sharing the show with somebody who wants a 24-hour look back on housing. All right, let's jump right into what we have from Case-Shiller as of this morning. Of course, this is going to be a little bit of a look in the rear view mirror as we have their year-end report. We're sitting here at February 28th. Okay, so that's just the way a lot of this housing data comes in. It's lagging. We do have some data later on in the show that'll be more relevant for up to the minute information. Okay, so home price gains weakened sharply to end 2022, according to S&P Case-Shiller. Obviously, the high mortgage rates weighed on home price gains in December. We'll talk about how that impacted us in the last couple months here in just a little bit. Home prices in December were 5.8% higher than the previous December, according to S&P Case-Shiller. That's down 7.6% annual gain in November. Prices are now 4.4% below their June peak. Really important here to think about this when we're talking to somebody who wants to sell their home this year, but they might want to wait. Listen, the longer you wait out as a home seller in 2023, the further away from that peak pricing you get. Okay, so December was 5.8% higher in 2022 than it was in 2021. All right, great. The further we wait in 2023, the further away we get from that peak pricing. Okay, so really important for someone who's going to sell to understand this. See, I believe if you're a home seller, right now is your moment. If you're a home buyer, patience is really a virtue. It's worth practicing some patience if affordability, if price is going to be the most relevant component to your buying needs in 2023. I've already had a couple agents that have shot back on me. It's like, hey, a deal's a deal in any market. I really want to caution people from saying, hey, it's a great time to buy, just because I say that throughout my career. I always say it's a great time to buy. If somebody comes to you and says, listen, I want to buy in 2023, but I want to buy it the most affordable moment for me in this particular market. Okay, then let's have an actual discussion about what affordability is going to mean for you, because there's a lot of pressure on prices right now. There's a high interest rate. There's a lot of people that believe the interest rate is going to come down when we go into a recession in 2023. So it all kind of lines up for a buyer to have more affordability later in the year. This is just what the data is telling us. But with S&P, which they just reported here, Case-Shiller, this morning, it definitely confirms that right now is the best time for a seller to be on the market. So that's critical information to get out into your market if you're looking for listings as an agent. Right now, Q1 for a seller is going to be the best moment for them to get their house onto the market. Home prices in December were 5.8% higher than the previous December, according to S&P CoreLogic Case-Shiller U.S. National Home Price NSA Index, which just came out this morning. That is down 7.6% annual gain in November. Prices are now 4.4% below their peak. Let's look at a couple charts that I've got available here. If I can get us back. There we go. We'll get to a couple charts. Everything's below, available in our daily download. Okay. Just this morning, Lance Lambert at News Lambert on Twitter, he put this chart out immediately. He's from Fortune. Great job, as always, from Lance. These red lines here signify each month. So those are the last 6 months of 2022 for prices. Okay. You can see that we are now, since the first time, really, since 2011, we've had 6 monthly declines. It's the most since 2011, where we had this entire stretch of home prices going up. These are month over month changes. So each green line, each red line on the chart below or in front of you is an indication for that month. Okay, so each line shows you for the month. So the U.S. home prices fell for the 6th straight month in December. It's the most since 2011. Since peak of June 2022, we're down 2.7%. When you seasonally adjust that, we're down 4.4%. So a little bit different than those numbers I was just reading to you. When you take just since peak into consideration and then without seasonally adjusting, down 4.4%. The further somebody lists their home in 2023, the further away they get from these peak numbers right here. And I believe, just based off of the data, the lower price they will get for their home. It's why having a little bit of patience for a buyer, is probably a really good practice in 2023 if they can practice that patience. This table shows you, in a different view, this monthly shift in U.S. home prices. This is seasonally adjusted from this Case-Shiller data. Okay, so you can see there in April of 2006 is when we started to, have some resistance on pricing back in 2006. And then towards the end of 2006, it popped up. And then obviously we know what happened in 2007 and 2008. We went red for the entirety outside of January, February of 2007. 2009 started the year red before we started to see, a little bit of resistance in those declines. 2010, we had more declines. We had that double bottoming in real estate. For those that remember, let me know if you remember that in the comments. And then all of 2011 was essentially red before 2012 we started to recover. And then really from end of 2011, 2012, all the way until the last 6 months of 2022, we've been on this green ride, this home price appreciation ride, ultra green since mid 2020 to mid 2022. Okay, so this is, to a lot of people, this was expected. I don't think we're going to have off of the cliff declines as long sustained as we saw in the middle of this table. But certainly we are experiencing these month over month declines, and we'll see what happens with some more of this Case-Shiller information as it continues to come out. Again, we're 2 months away from year end. So let me know in your market if the first 2 months have seen any price drops. Just had a buyer back out due to horrible credit, and they didn't know they had. First conversation needs to be had. Download Credit Karma. Didn't even think I needed this. It's a first. Rebecca, I'd encourage every single agent out there to have daily conversations with your lender. Probably have a couple different lender partners. All right. I spoke about this on a podcast, or maybe even previously on the hot sheet. Having daily conversations with lenders right now is really important, because you may have a buyer that qualifies. They qualified 3 weeks ago when interest rates were 5.99. Might not qualify for the same house today. Daily conversations, holding your lenders to a high level of accountability right now. And also, I want the education of what's happening in our market every single day. Like, what are the rates from lender to lender in your specific market? Because some markets are a little bit different. Like the number that we're going to go over here, before the end of the show, is the national average. But there can be some differences for some local lenders. Jake says people are renting and are tired of being renters that want to buy. Would you want them to wait as well? Jake, listen, here's what's going on. We've seen rents come down, okay, month over month the last nationally here the last half a year or so. We're going to continue to see that this year as rental inventory comes on the market. Do I want to see people, that want to buy a home and have home ownership continue to rent and wait it out? No, I do not. But here's the reality of the situation that's going to force some people to stay into their rent. When they look at how do I make ends meet this year, 2023, and renting right now nationally is $800 less a month than it is to own a similar home. Okay. If they look at their entire year, they're going to say, well, if I can save $800 a month and I need to make ends meet, we're in high inflationary times, we're probably going to go into a recession. Maybe I do wait a year to save that. We're talking about $8,000 plus dollars. Okay. When you say $800 a month throughout the remainder of the year. If we're just looking at 12 months, it's going to be cheaper in almost every market in America right now. This wasn't the case a year ago, by the way, when we had interest rates, at 3%. But right now, it's actually cheaper for people to rent. And so if they need to make ends meet this year, they may have to make that personal decision. Long term, if you're going to be in the same place for 7 to 10 years, long term, it's definitely going to be more advantageous to buy. I want to see the home ownership rate go up from where we're at, 66, 67, 68%, something like that. We talked about it on yesterday's hot sheet. I definitely want to see that go up. We know that that's the fastest path to wealth. But Jake, just going out there and saying it's always a good time to buy because home ownership is better than renting. I get it long term, but there are people right now with the position that we're in these economic times that may need to rent. And if they ask me, hey, is it going to be cheaper for me to buy a house in Q1 of 2023 or Q3 of 2023? The data all points to 2023 Q3 being cheaper, being more affordable for a buyer. That being said, and I talked about this on Knowledge Brokers podcast on Friday. And me and Tom will go into a very deep discussion about this, Jake, and others. I would encourage you to go check that out. I've given this advice multiple times to buyers, depending on the situation, or advice that's just contrary to people saying, it's always a good time to buy, always a good time to sell. But how's it always a good time to sell and a good time to buy at the same time? That's an interesting dilemma, right? But here's all the data, here's all the information, and you're still going to have buyers that say, you know what? I appreciate it. I trust you, Jake. This is unbelievable information that you've armed me with. That being said, my lifestyle is dictating that I am going to buy a house regardless right now, and they're going to go ahead and move forward with the purchase. If you're an agent right now, it's about talking to more people. It's about, you're in the service industry. It's about helping more people. It's about having more conversations. And if you do that, the agents that win in every single market that have the most conversations are going to be the ones that continue to give great advice, knowing that a percentage of the people that they talk to are just going to say, appreciate all the advice. Appreciate that. Yeah, Q3 looks like it's going to be more affordable for me. I'm buying anyways. And by the way, you're my guy because you were honest and transparent. That's how this thing works. That's how you're going to pick up lifetime clients and lifetime relationships as well. All right. So there's the news on the S&P Case-Shiller. I don't think it's very surprising to anybody. Let's switch over to where we are on weekly housing inventory. We've been tracking this every single week here on the hot sheet. We're hoping that we're going to see it go up. Unfortunately, the reality is it is not up. Okay. We are continuing to go down. So this I'm reading from Housing Wire. Weekly housing inventory decreased by 6,801 units. Last week, it was over 6,800 as well, while new listing data is still negative year over year. This is another contributor to this unaffordable situation that buyers are dealing with. Going back to my previous point there, if you're a buyer, the expectation, and this is what they talk about in this housing market tracker that comes out every single week on Housing Wire, the expectation is that eventually here in March, we're going to see this number that we're talking about, this inventory number bounce off the bottom and start going up. That we're going to have our seasonal increase of inventory. If that happens, if we go through a recession and interest rates lower, okay, then and prices continue to go down, which we just talked about with the Case-Shiller report. If those three things happen, it is a guarantee that it's going to be more affordable for buyers to buy later in the year than it is right now. Okay, listen, I know your coach probably ain't going to tell you that. Your broker probably isn't going to tell you to go out and say that. But if I'm having one-on-one conversations with buyers in my market and they ask me deliberately about money, about when it's going to be the cheapest moment in this year to buy, the data tells me it's certainly not today, because the data tells me it's the best time to be a seller this week in 2023. I'm closer to peak pricing. I've got this incredibly low inventory number. Okay, so what does the inventory number look like in comparison to same week last year? Same week last year, obviously, we were at the all-time low. This is the second all-time low for total inventory. This is just total inventory on the market. This does not include that pending number that NAR comes out with, which is under 1 million still today when you include pendings in here. Weekly inventory change fell from 436,558 to 429,757. That's from last week. And last year, obviously, we were in the below 250s. When we look at new listing inventory, we're at even a lower point than last year. So, inventory here coming in the next couple of weeks gets even scarier. Okay, so we're at 45,918 for new listing inventory. Put that into perspective, 2019 was 60,453. You can see here the new listing chart, which we shared last week in a daily download. The black line being 2023 here at an ultra low point, in line with where we were 2021 for new listings. Okay, so pretty incredible stuff there on the inventory. I would say that inventory is another big contributor to where we are for this unaffordable situation. We're hopeful that in March we'll get inventory back up. Okay, yesterday we had a NAR report on pending home sales. They improved for the second straight month. Okay, so taking more inventory off the market. Pending home sales improved for the second straight month, up 8.1% in January. Okay, month over month contract signings raised in all 4 U.S. regions. Pending home sales dropped in all sale regions from 1 year ago. Okay, so if we're looking from last year, which we just saw those inventory levels were incredibly low, obviously we're not anywhere close to that. Year over year, pending transactions dropped by 24.1%. Okay, our index right now is 82.5 in January. An index of 100 is equal to the level of contract activity in 2001. Okay, so we're well below contract activity of last year or that of 2001. Buyers responded to better affordability from falling mortgage rates in December and January, said NAR chief economist Lawrence Yun. Great, but we know that as we sit here today, and the last couple of weeks, mortgage applications have reflected this, that we have an interest rate that is up considerably, right? We're back up to almost 7%. So we'll see what February looks like. And this is a month-old data, NAR, right? So this is great. And NAR's not going to come out, by the way, with February till March 29th. March 29th at 10 a.m. Eastern is when they're going to come out with the pending home sales data for February. So I don't know, a month from today, we'll know what February looks like. I'd encourage everybody in your local market to be looking diligently every single week at your pending sales data and to be putting that out there into the market, into your database, so that people understand week over week what's happening with pendings. These pending sales are the best indication of what, the market's going to look like moving forward. NAR giving us an update on January. Great. We all knew in the comments, let me know. We all knew January had an uptick in inventory, in pending sales rather, because people came out of the gates and we had a little decrease in the mortgage rates. I'm curious, and let me know in the comments, what's it like in February right now for pending sales? Because that's going to be a better indication, obviously, than January. Okay, so pending sales up in December and in January, according to NAR. But don't get over anxious. Don't get overzealous. Rather, that this is an indication that we're going to see, the bottoming of the market. This number could go down in February with what we've seen from interest rates. If interest rates hang around 7% in March, we may not see much growth out of that either. Also in our daily download is this chart. We're at the index of 82.5. So well below 100, which coincides with a higher level of activity relative to 2021. Month over month, we're up that 8.1%. Northeast was up 6% on pending contracts. The South was up, Southeast was up 8.3%. Midwest up 7.9%. In the West, which has seen the largest home price drop, is down or is up 10.1%. So with those prices dropping, they had the largest increase in pending home sales. Okay. So there you go on that. Back over here, we've got one more National Association chart for you. Pending home sales broken down by year. So you've got 2020, 2021, 2022, all there broken up by each region. Okay. So 2022, we're at this 91.9 index for the year. 2020 and 2021, much higher activity than 2001, which is they go off that for that 100 number index. January 2023, of course, we're at 82.5, but up from where we were the second half of the year. So pending home sales improved in January. I would not think that that's going to happen here necessarily if we stay up over 7%. We've seen what has happened as we sit over 7% interest rates in the past, and we'll see what happens here moving forward. Let's see where we ended the day yesterday for the 30-year fixed and where we are right now on the 10-year. 10-year was down yesterday. Today we are up a tick, so we're getting pretty close to 4 on the 10-year. It's the highest level, certainly all year, and highest level since November of last year. Not good news for what's going to happen with the 30-year fixed today. We went down a tick yesterday to 3.78. That was good news. I expect that number, if the 10-year holds, to go up again today, maybe back up to that 688 level that we ended the week last week. Okay, there you go on where we're at here up to the minute in housing. Today at 2 p.m. we're premiering the Real Word episode for this week. Nicole and I will go pretty deep on some of the not necessarily some of this stuff, but some other trending topics in the industry. So 2 p.m. on the Real Word, and then also sign up down below. We have a webinar tomorrow. Myself, Nicole White's going to be joining, Dan O'Neill and Taya DiCarlo. Top strategies before your 2002 tax filing. That's sponsored by Formations. Okay, so top strategies before your 2002 tax filing, coming from agents. What to do to get ready so you don't get into the hot water like so many agents have before. That's going to be tomorrow at 3 o'clock. Make sure you sign up for that webinar down below. I'm in Connecticut. There is snow on the ground, but I will be excited to bring you another hot sheet tomorrow live at 9:30 a.m. Eastern. Until then, toodaloo.